Well, good day there, Wealth Press subscribers, viewers, traders, and investors. It's that time again. It's the weekly wrap-up, and I am joined, as usual, by my good friend, Mr. Roger Scott. Roger, how are you today?
I'm doing great, James. It's a Friday, and thank you for having me on.
Sure. No, it's a pleasure, as usual. Roger, tell us about your trading week. What happened? Where did you see successes? Where did you run into challenges? And what's the week ahead going to look like?
Well, I'll tell you, the week has been very, very interesting. This is not. Last week was a week beginning of last week was a week to be a hero. This week was a defensive week. This was not a week to really. This was a week to kind of sit tight. The market right now, James, is in a very, very peculiar position. Actually, a very, very peculiar position. Imagine you're driving on a highway, and you have two paths. And you clearly don't know which of these paths that you're about to go on. That's where the market is right now. And it's very interesting because it hasn't been on that path in a long time. For the first time, James, something big happened. People are now, for the first time, they're starting to ask the questions, the right questions about this COVID vaccines that are coming out. For the first time, the world is not, yes, there's a COVID vaccine, we're back to normal. No, there's no COVID vaccine, we're going back to the Stone Ages. For the first time, people are finally asking. I'm hearing the conversations on the news, on the radio, on the internet. Just this morning, the first thing I turned on the radio, there was a talk show. Somebody was talking about, oh, you don't have to worry about this freezing this one. You only have to freeze that one. And how long will it be good for after I get it? And am I going to be able to take these whenever you start hearing these type of questions, it means that the market, the people, the world is starting to assimilate something. And that's something I've been waiting for the last several months. And it's the first time we're starting to do it. And as we're hearing that, we're getting a higher level of COVID. So on one hand, you're hearing things are starting to get better. We're going to get through this. But at the same time, the death rates are getting worse. The schools are closing. So you have a very interesting dynamic, and the market is really, really in a position right now where if it goes door number one, then the market is going to assimilate that the outcome and the vaccines from the COVID are going to overcome the increased death and the increased resurgence rate of the vaccine. On the other hand, if you go this way, it means that the world is still fearful and doesn't believe it's going to happen fast enough. And it's really interesting how we're literally between this between these two roads. And you can really see it right now in both of the indices. You could, and then on top of that, you throw in the still minor election uncertainty that has a lot of people kind of off on their kind of like creating their own little reality. It's a very interesting time right now. Very interesting time. And here's something else I'm seeing. So on the S&P 500, I'm seeing broader stocks that we have not seen in a long time beginning to join the party. For example, Expedia. Expedia is roaring. We all know what Expedia does. They book holidays, they book vacations, they book hotel trips. That's not a good COVID stock. That's a recovery stock. On the other hand, you're seeing these COVID so it's really interesting to see this right now. And I think I know who's going to win, but it's a very interesting time. It's the first time that we're having the battle of the good versus evil, so to speak.
Yeah, I find it interesting because, we'll be lucky if we can get enough of either vaccine made, should their 95% efficacy with zero toxicity persist after longer trials. We'll be lucky to get the vaccines into the general public by flu season 2021, never mind 2020. So I hear what you're saying. They're asking the right questions, and depending on who you are and where you live, people are having a hard time reconciling the fact that we're just going into the worst phase of the pandemic, despite the fact that a vaccine appears to be imminent in terms of availability. So I think that's the conundrum that people are having a hard time with. And so is that sort of push me, pull you sort of dynamic, what's causing the push me, pull you effects in the marketplace, where it's very difficult to predict, even using strict technical analysis, what's about to happen next?
Yeah, because you see here, and this is kind of going, let me kind of go full circle. I'll go full circle with you right now. And I'll explain your question by reminding you of something we've talked about several times. You might remember that I've said maybe 3-4 months ago, when we were in the thick of this COVID thing, I said, it's actually easier right now for me to pick stocks, because when the market is bullish or overall bullish, it's hard to find the bad stuff, to pick the bad ones from the good ones, because everything is rising. In the kind of economy we had 3-4 months ago, it was very easy, because the only thing that was going up were the stay-at-home stocks, and there was very, if you knew where to look, it was very easy to find momentum stocks, because 90 stocks are going down, 10 are going up, and they're all, Chewy and Zoom and Peloton, and gee, I wonder what's going up, stay-at-home internet services. That was it, really. And then it started getting broader. But now, James, yes, it is harder, because you have companies from now, when you're looking at the S&P 500, and I'm looking at the top 50 stocks, I'm seeing General Motors, I'm seeing Expedia, I'm seeing Tupperware. At the same time, I'm seeing Moderna. So the market is kind of market's always looking ahead several months, and the market has pulled both the stay-at-home and the non-stay-at-home stocks to a certain level, and to make this conundrum even worse, you've got energy sector rallying. People who don't understand, it's rallying, but it's really what's causing the rally in the energy sector is the evergreen stocks that are rallying because of Biden and are pushing the rest higher. The traditional energy stocks are still down. So you're having a very, very conflicted market right now. And yes, it's much harder right now, because here, let me go back to what you just said. Let me give you the scenario. Let's say people realize, bless you, let's say people realize that, let's say this thing that people, this hope against hope, that, people are hoping that they want to travel, they want to fly, they want to go to Royal Caribbean, which has been rallying. And again, they find out we're not there yet, which is, by the way, what I think that's going to win the fight. And the stay at home is going to win again. And we're going to see a repeat, more or less, of what we saw in February, March, and April of this year. I believe we're going to go down that path, okay? For the same reasons that you said. My doctor told me best case scenario, I'm not getting it for 6 months. He told me that end of October when I went for my annual checkup. And he already knew they were going to approve it this month. He already knew they were going to he knew all of that stuff. So if my doctor knows this, and this is a pretty, young guy, he's checks all the, I think it's safe to say that we're not going to get this till 2021 flu season. I think that's a very fair estimate. So, but again, it's much harder right now to trade than it was 2-3 months ago. You don't have that clarity. You have optimism on both sides, and if things will go the way I think that we're going to go, we're going to have a lot of stocks moving south, and there's going to be a huge level of disappointment and pain once again in the market.
Wow. Well, so in that volatility, certainly there must be imminent opportunity. I mean, if the virus is going to inflict economic damage, one would assume that would be followed up with a lot of central bank stimulus, which is nothing but bullish for the market. So is it a near-term risk for a longer-term opportunity?
Yes. And if you want me to be more specific in terms of the opportunities, I'm going to tell people don't try to outsmart the market, and don't go for things that you're hoping will happen. Go for things that are happening. For example, I just received a report. I'm going to be talking about it in about an hour from UBS Bank. they're talking about e-commerce in emerging markets having a very good 2021. And I'm seeing that no matter which door. See, I want to pick stocks that are going to do well regardless of which door we go to.
Sure.
So I know that internet commerce, first of all, it's been picking up no matter what. Second of all, if we get stimulus, it's going to pick up. Third of all, if we go to the stay-at-home environment, my God, it's going to pick up. So there's a lot of opportunities. Again, cloud, e-commerce, emerging markets, e-commerce, Chinese e-commerce, JD, stocks like JD, SE. These stocks that I picked, James, 6 months ago, they've doubled already in price. You may or may not know that. But I still am very, very bullish on them. I still think they have a good upside potential. I believe there's a stock called Tencent. Here it's a over-the-counter stock, but it's one of the biggest tech drivers in China. Ticker's TCEHY. 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 Tencent. And we got South Korean over-the-counter stocks. We got there's a lot of opportunities right now in markets that will not be as impacted by this COVID as others. Also, home builders and housing stocks, residential construction. It's booming, and it's going to boom for a foreseeable future because of the change that has happened with COVID due to the stay-at-home environment. So there's a lot of opportunities, but I'm not necessarily keen on finding new ones. I'm going to be kind of boring, and I'm going to be kind of going with here's what I'm thinking. I'm thinking during the COVID-19 and the stay-at-home environment winning over the other side by about 75% to 25%. And on that note, picking stocks that are not really dependent, like basic materials, home construction, trying to stay away from the FANG stocks. Also, with the Biden administration, you might recall I was talking about smaller stocks, Russell 2000 mid caps being undervalued. Since the election, they have gone up 2-3 times as much as the S&P 500 has, and they were moving ahead of the S&P all the way going back, James, to the first debate. Since the first debate, the Russell 2000 and the mid caps are up 6 something percent. The S&P's up 2 point something percent. So I am seeing a lot more vulnerability in Nasdaq 100 because those FANG stocks are overbought. I'm seeing a lot more value in the Russell 2000 and the mid cap stocks, and I'm seeing a lot more upside in cloud technology, that part of the stay-at-home segment, the home construction, home builders, and basic materials like Tupperware, things like that. Boring stocks. I think there's going to be a lot more value. And again, if you want to go either way, you've got Gap, L Brands. Those stocks have been top stocks now in the S&P 500 now for the last 3 months, and they still are. And I think regardless of what's going to happen, people are going to be buying clothing, shopping from home. So Gap and L Brands are doing very, very well. And again, those are not FANG stocks. I wouldn't be in the FANG stocks right now. The Amazon, the Netflix, the Facebook, I would give those stocks a good pause. They need to cool off quite a bit. And also, and again, don't confuse the energy sector moving up because it's a very broad word. Energy now is, renewable energy and and it's the non-renewable sector that's causing up. So I'm seeing a lot of things happening right now, James.
Sure. Do you think that the Biden-Harris administration is good for other sectors? Like, for example, I've seen cannabis stocks in the U.S. have really started to take on a head of steam. In fact, our September choice Curaleaf is up over 100%. And also, I've noticed that some of the renewable energy technology stocks like lithium-ion, next-generation lithium-ion battery replacements are starting to do very well, but all part of the Russell 2000 sort of environment. So is that really where the opportunities are going to be long-term from an investment perspective as opposed to from a trading one?
Well, James, statistically speaking, when the Russell 2000 underperforms the S&P by X amount over a certain period of time, which it has done, it tends to outperform for 3 years afterwards. You see, here's the thing, James. I'm going to be very real. You know, I'm a straight shooter. I'm not a I'm very blunt.
Yeah.
If you look at the S&P and if you look at the Russell 2000, if you take a monthly chart and you look back 20 years, you're going to see the same thing. You're not going to see a lot. So right now, the Russell 2000 has about 12% upside to catch up to what the S&P and the Nasdaq have done while it has been sitting idly waiting for the trade war to end almost the last 2 years. So it's got a lot of catching up to do. So I think it's both trading and investing. Trading, you're going to have less pullbacks. Investing, you're going to have added upside. And also, James, statistically speaking, and what I'm about to say, your readers should really focus and viewers should focus on this. This is very big. On average, the Russell stock moves up 6.5 times what the S&P stock does.
Wow. There's the opportunity. Huh. Okay. Well, that's great, Roger. So then it's been said that the ability of the Biden administration to exceed in, or rather succeed in achieving some of its more banner representative programs is going to be difficult with a divided Senate. But the divided Senate is not necessarily a fait accompli at this point, is it?
Not yet, no. I don't even know if the Biden win is a. I mean, you know, you hear. I'm still hearing. I still do my boot camp, and I'm hearing. I get tweets from this may happen and this may happen. It's still not. You know, there are still some people that are not assimilating a Biden win. So the point is, I do think Biden it's going to happen, which means the market is going to assimilate all those things that you've mentioned even more than they are right now.
Yeah, I think the phenomenon around the, the people who still believe there's a chance that Trump could somehow win a victory, I think that exists only in the United States. The rest of the world has well and truly moved on, and it's a done deal as far as the rest of the world is concerned. But so how realistic is that there's actually a chance that Trump could prevail through the courts?
I'm a realist, and I think there's about a 1% chance.
1%. Okay, well, that's not very much to worry about. So what about now some of the policies that are obviously more oriented towards the Democratic ideology, and I'm referring now to environmental protections that have been more or less annihilated over the last 4 years by the Trump administration. Do you think that the Biden administration is going to move to reinstate some of those things like no-go for offshore drilling across out in the Bering Sea and all of these different things that basically have shut down aspects of the basic materials industry in the past, but have been reopened by Trump? Now, is that going to take a step backward? And so therefore, should we be pulling in our horns when it comes to investment in things like mining?
Not yet. Not yet. I wouldn't give that up. I think Biden is not as left as someone like Bernie Sanders, for example. I think he realizes the value in this and the money opportunities. I wouldn't be so fast on that. I would be cautious. But there's another aspect of the Biden administration that I think is interesting and is going to be for sure impacted by it. And I'll tell you what it is, and I think you're going to get a kick out of this. I think one of the biggest things that the Biden administration is going to do, and this is not speculative, this is probably true, is he's going to make a lot more waves towards legalizing drugs and expunging records of people who have been convicted in prisons for minor marijuana possession. Also, what happened in the northwest side of America, this thing that's happening. We just had Oregon completely decriminalize drugs in small possession, heroin, cocaine. Now, I don't know if that's good or bad, and I don't want to get into policy, but I will say this. There's going to be a lot less people in prisons, and private prisons are terrified of this. So while I'm here, why don't I give you, and see, I don't like to speculate. Why not just go with that's on the table? This is on the table right now, and this is going to be impacted over the next 4 years. There's two stocks here, James. Geo Group and Core Civic. They are private prison stocks. And I'm going to tell you, private prison stocks, more regulations, less money, immigration. Biden is not going to be tough on immigration like Trump is. A lot of people have been put in prisons or jails permanently, temporarily due to immigration. That's not going to be happening over the next 4 years. Marijuana possession charges, James, 30. Let me give you a number. This is eye-opening. Let me give you this number. 40% of drug arrests in 2018 were for minor marijuana offenses. Those are going to be out. So if you look at the ticker symbols, CXW and GEO, you will see very, very strong downtrends that should continue moving in that direction. So again, I don't know what Biden will. If I don't know what Biden will do, I'm going to be. But in this case, I know what Biden's going to do. It's a no-brainer. They've been promising it. They've been talking about it. They're going to be moving on this, and that's the way this country's moving anyway. Remember, marijuana was first medically legalized in Oregon, and now Oregon is always the first place where. Then it goes to Washington. Then it goes to Colorado. Then it goes to California, just like medical pot did, and then it starts going throughout the country. So if this trend continues, there's going to be a lot less people in jails and prisons, and these companies are not going to be doing as well. So something to think about in terms of, because you brought up how the policy will change things. It's going to change things right here.
Sure. Okay. What about investors who are more oriented towards a fixed income / dividend environment? What does 2021 hold for them in a Biden administration?
That's actually a very good question, James. It depends. When you're talking about blue chip stocks, you're talking about interest, you're talking about company valuations. I'm not seeing valuations changing too much, and I'm seeing interest rates remain near the current levels for quite some time. I'm not looking at much higher dividend, possibly. And remember something else. A lot of the aid that was given in the last recession went towards dividend payments. So this time around, the government was very, very clear that they did not want to do that. So there's going to be restrictions on that. So I believe, because they want the money to go to rebuilding the company, not to pay, not for payouts. So I believe we're going to be stable, but we're not going to be seeing a strong increase in those type of assets.
Okay.
He's not seeing it.
Yeah. Okay. What about, say, precious metals?
Precious metals is an interesting thing. Here's what I'm going to say. Technically, I'm not liking what I'm seeing in the gold market right now. I'm actually quite disappointed, and I thought I was going to see the opposite. But I'm not giving up on gold. I want to see how gold is going to how it's going to trade when it hits the 200-day moving average. Right now, it's in the twilight zone, as I like to call it, between the 50-day and the 200-day moving average. So I'm a lot less bullish on it now than I was, say, a month ago. But I still believe we're going to see some wacky trading action, possibly correction in the S&P and the NASDAQ before the new year. I think we're going to have a washout. And I want to see how gold reacts when there's a lot more certainty in the government. And I want to see how it reacts when it hits the 200-day moving average. So right now, I am mixed on it.
Right. Okay. Then that's great, Roger. Let's leave it there for now. That's a fantastic update as usual. We'll come back to you on Monday for the roundtable. Thank you very much for joining us, and have a fantastic weekend.
Have a great weekend, James. I'll talk to you soon. Take care.
You bet. Bye for now.